Folks, I'm about to blow your mind. In the past few days, we heard a lot about why Palantir is down 15% ever since posting earnings. What the hell is going on? All of this chatter, this endless word salad, without giving you the actual explanation. What I will reveal in this video is not only going to blow your mind, which is a promise, not a clickbait. It is also going to make you more bullish about Palantir than you have ever been before. Wait and see. And for me to show you that, I have to start with what happened just a few days ago. I was watching the annual Berkshire Hathaway shareholders meeting, which was absolutely beautiful, and I saw Warren Buffett at his prime. He is 1,000 years old, still as sharp as ever, super likable, down to earth, loves to teach. That's why he's truly one of the greats. And he was asked one question by this gentleman in his early 20s. He was asked, look, Warren, what would you do today if you had to start over as an investor? If you had $1 million, how would you get back to being a billionaire starting in 2024? And when he started answering this question, in the beginning, I thought I was about to absolutely check out of this mentally. Because he started talking about railroads in the West Coast. Like, is it really going to talk about investing in railroads? What are we doing here? It's like, this is so unlike Warren Buffett. And then towards the second half of the answer, I understood its brilliance. He was talking about how he fell in love with railroads and how much time he invested in researching the topic. So he knew every single company, their routes, their names, their nicknames, every single thing. He read 2,000-page manuals about railroads. He fell in love in the topic. He knew more about it than anybody else, with the exception of Charlie Munger. And he had conviction to do this over a long period of time, invest, accumulate stock. That's how you create arbitrage. That's how you create mispriced opportunities in a world when everybody has all the information 100% of the time and all the information. At least theoretically, assuming there's no insider trading, which we know is inaccurate. But assuming most of the market is efficient, how do you find undervalued companies? That is how. You research, you fall in love, you obsess about an industry, a company, and you become the world's most insane expert in that specific topic. That's how you create informational arbitrage. Now, I'm not here to say that I'm the world's best expert on Palantir. I think it's far from it. I've seen a lot of people put in thousands of hours researching this stock. I'm not even in the top 10%. But I'll tell you what I've done over the past few years, ever since they went public. I've read the entire 0 to 1 book by Peter Thiel, which is basically a manual of how and why Palantir was created to be what it is today, years ago. I've read the entire Palantir casebook, 500 pages. You can buy it on Amazon. I don't have a sponsored link. I've read client presentations about Skywise, which is the foundry for airlines. 2 presentations, each with specific detailed test cases. I've learned about AOG, airplane on the ground, why it's important. I've learned about every single valve out there, how the oil measurements impact the fuel consumption. I've learned everything about the airline industry just to understand Skywise, just to understand Foundry. And that's the legacy business. That's not even AIP. I watch every freaking video on Palantir I can find, including every video on their website. I talked to their CTO, Sham Sankar, and bombarded them with endless questions about the platform, the technology. I engage with the community. I talk with anybody who's willing to offer me information about Palantir, including a guy who's in my DMs right now trying to set up a meeting with me, who's from the industry, wants to offer me more info. And I talk to haters and bears who absolutely have a bear thesis about this company to understand their point of view. I talk to former employees of Palantir who reach out to me, and I talk to them about the problems they've seen in the company. I read the entire freaking website, page by page, letter by letter. I learned the entire industry, the competitors, the comparables. There's 80 customer reviews on the platform, on Palantir's website. Some of them with video, some of them not, with use cases per industry. I've read them all, every single breakdown out there. That's just a prime example of how you obsess about a company. So that minus 15% in a week does not scare you, but rather excite you. But that's not what I wanted to tell in this video. This is not my promise to blow your mind. It's not even close. I will deliver on that promise. I have not clickbaited you for this video, unlike other videos, but this one is for real. Now, when you hear things like RBC's Rishi Delura talking about Palantir post-earnings in the way I'm about to share right now, there's two ways you can interpret that. And I'll show you the clip in a second, at least part of it. You can take it as something that scares you about the company, or you can see it for what it is, which is, without any disrespect to Rishi Delura, complete misunderstanding of the business model, which creates an opportunity for you to buy stock cheaper than what it should be priced at.
This has become a hyped, or in my opinion, overhyped generative AI, beneficiary company, and we can get into that in a second. Remember, Palantir is very heavy customized software, right? I estimated more than 30% of their business is actually professional services and outsourced data science rather than actual true software.
So Rishi Delura talks about Palantir in a way that makes it very clear to me and some of my compadres that are obsessive about Palantir. Makes it clear that he doesn't really understand the business and the company, and that is no disrespect to him. Analysts, they work on tens of companies they have to cover. They just don't have the time to obsess about the stock like we do. Rishi Delura is talking about a company that has high revenue growth with 20% revenue increase. They have high operating margin with almost 40% operating margin. A company which increased its revenues over the past 3 years by 100% while decreasing operating expenses by 12.5%, which is unheard of. A company with an accelerating revenue growth, 21% revenue growth right now versus 20% previous quarter, 17% the quarter before that, 13% in the quarter before that. Over the course of a year, Palantir has increased the level of acceleration of its revenue growth from 13% per year to 21% per year in a single year. Now, on the other hand, it's becoming more balanced. Commercial growth is actually accelerating way faster than government. So now we're almost at the tipping point where we're about to be 50-50 commercial and government. Just a couple of years ago, we were at 60-40. So Palantir is becoming more balanced. Their top 20 clients are increasing their annual spend by 10% per year. The net dollar retention is increasing right now at 111%. So to me, when I hear Rishi Delura speak about things like, well, this company requires a lot of customization for the products, which means it is more consulting than software. Now, to me, it shows a lot of misunderstanding about what the product is, what AIP is. We're talking about a sandbox, completely industry agnostic. It's so easy to form, like Play-Doh. You can make anything out of it in hours. That doesn't make it consulting. It couldn't be consulting. With 82% gross margin, with 36% operating margin, this is not the margin of consulting companies. Now, Foundry, which is the previous gen, took 3 weeks to deploy, which in itself is not consulting. AIP deploys same day. Companies come to boot camps, leave with a working product same day, within 10 hours. That's not consulting, sir. That's just a misunderstanding. And he talks about, well, they don't create any AI. They're not an AI generative company. Now, that's a mistake that's been done by a lot of commentators in the past. Some of them have repented. This guy isn't yet. But let me explain something. You see, generative AI, LLMs, have been commoditized to death. It is now like the USB connector. Everybody makes one. My grandpa has an LLM. This is literally like saying, well, Microsoft PowerPoint is a lot more valuable than Windows, because you cannot create any information, any documents in Windows, but you can create documents in PowerPoint. Which one is more valuable, PowerPoint or Windows? AIP, which is the operating system for every single AI platform out there, or the random, generalized, commoditized LLM large language model? I think the answer is quite clear. Look at the customer growth on US commercial. Palantir has grew their customer base in the US commercial sector by 70% in a single year. That does not happen if they don't have a cutting-edge, game-changing product. Now, here's what I promised you. I promise to blow your mind, absolutely make you go kaboom when you hear this about why the company posted such great earnings. They've beat EPS, they've beat revenue, they've increased their guidance, and yet they've dropped 15%. What happened? Nobody's talking about this. And this is a prime example of how obsessing about a company beyond any sort of normal reason, absolutely insanely, pays a lot of money. I'll show you. Of course, you need patience, but here's the crux of it. You see, the trading right now is mostly algorithmic. It's bots, it's computers. Institutional investors basically just use computers to automatically trade. If a company beats earnings, stocks fly up. If they miss earnings, stocks drop. It's an overreactive environment because all bots essentially are in the groupthink mode. Palantir reported revenues of $2.22 billion in 2023. They gave guidance of 2.66 for 2024. Now, all 2024 estimates by analysts are aggregated to create one estimated number. If the company beats this number, stock flies up. If the company misses this number, stock drops. It's an avalanche. It's everything amplified. Now, if you look at the analyst estimates for Palantir's earnings, for Palantir revenue specifically, you find that all of them were basically very close to the Palantir guidance of 2.66 billion, because why wouldn't they be? The company knows best where they're going to be. Some were above, some were below, but the analysts basically hover around that 2.66 number. Now, we all take this number, we aggregate it, and we create one estimated number, which above it means a beat, below it means a miss. Now, a few days before the earnings, we have an undisclosed analyst who have joined the fray. We don't know who that is. Days before the earnings, and this analyst comes out with $3.2 billion of estimate. That's $400 billion above the number 2 highest estimate. Now, what happens? That pulls the average of the beat up. So now, Palantir doesn't have to beat 2.68 billion, which was the case just a few days before earnings. Now, the beat number has been raised to 2.71 billion because of that one analyst that joined a few days before, undisclosed, with 3.2 billion of estimate versus a company guidance of 2.66 billion. What happens? Palantir reports 2.68 billion, in line with the estimates, but below the new average. What happens? Stock plummets 15%. What happens? Somebody makes a lot of money shorting the stock. Now, I'm not saying that anybody specifically did this. I don't have any evidence to show you who did this or why they've done it, or maybe this is just a coincidence. I don't know. This might be a crazy coincidence. I'm not saying that this was any foul play here. I'm not saying anything because I don't know. I don't have any evidence. But there's one thing I know. I see this playing out, and I see that Palantir actually beat revenues, beat earnings, gave increased guidance, and dropped, no matter what the monkey business is. And we know that, retail investors always get screwed like this. Because we know all of this information about the company, how great it is, we know how good the earnings really were. When we see the stock drop 15%, this is like giving us a gift, giving us a present, because this is clearly BS. And that BS is going to make money for the people who are obsessive about this company. Plenty members of the Palantir community can see through this BS. It's a smokescreen. That is why me and others remained bullish on the stock when everybody became bearish, when certain YouTubers were selling at the bottom. We just keep dollar cost averaging into the stock, buying more, and buying more. And if it drops 15%, we buy more even harder. Simple as that. Now, again, don't go all tinfoil conspiracy theory on me here, because I don't know what happened. But this is a prime example of how an anomaly, let's call it an anomaly that leads to a discounted sale of a stock that's in a great shape, makes money to people who understand it in a world where everybody has all the information 100% of the time. I promise, and I delivered. I'll see you in the next one.